Hey guys, what is going on? Welcome back to my Robinhood portfolio. Hope you guys are having an outstanding day as always. What I thought I would do today is talk a bit about what happens if the markets pull back. As you guys know, we are currently experiencing all-time highs in all three major indices. The Dow Jones Industrial Average breached 20,000 points this last week. So a lot of you guys may be wondering, how high are we going to go? Is there going to be a pullback? I personally think it is not unreasonable for a pullback to happen over the near term, at least in the next few weeks to few months. I think overall for 2017, it's going to be a very, very good market with great returns. But over the next few months, with some anti-trade policies that have been kind of circulating through the new administration, as well as just overall uncertainty, there could be a little bit of a pullback, especially given that we have, as I said, reached all-time highs. So there's a number of different ways that market pullback can be traded. A good one that can be utilized on Robinhood is utilizing inverse and leveraged ETFs. So I have one here, this ProShares Ultra Pro Short QQQ, otherwise known as SQQQ for the ticker symbol. And as I trend down to the bottom there, it's kind of hidden by my logo there, but you can see this is ETF that is essentially providing inverse exposure 3 times, so it's leveraged to a modified market cap weighted index of 100 of the largest non-financial issues listed on the NASDAQ. So essentially, as the NASDAQ trends down, this will trend up, and it's 3 times leverage, which simply means that this ETF is utilizing a lot of borrowed capital or borrowed money to generate investment returns. So essentially, kind of like Robinhood Gold, trading on margin is a type of leveraged account. Basically, you borrow money to invest, in those returns off investment help augment your returns with knowing that you have to pay a little bit back with regards to a cost. Robinhood Gold, for example, costs 5%. Other leverage accounts a little bit less, but nevertheless, you have to pay a fee back, whether you're borrowing it from the bank or, like I said, through Robinhood Gold, through Robinhood itself. So SQQQ here, you can see over the last 5 years has trended down, which would make sense because there's been very strong markets over the last 5 to 10 years. You can see, however, over the last month, there's been a lot of uptick in these sorts of inverse and leverage ETFs here. This one in particular is up 244% over the last month. Here is another one, SDOW, another ProShares Ultra Short. On the bottom here, you can see this is providing a 3 times inverse exposure to price-weighted Dow Jones Industrial Average, which includes 30 of the largest U.S. companies. So, again, a lot of these inverse ETFs are simply picking one of the major indices and kind of following some of its major companies. And, again, the whole idea is as the market trends down, these will trend up. It's an inverse relationship. And since it's borrowed money, it's a little bit more risky, but it also generates a little bit more return as well. So your returns are augmented 3 times with these particular ETFs. You can see for this one as well, this is up 282.4% over the last month. So a lot of uptick here, and I think this is maybe an indication that the market will pull back a bit here in the near term. Another one here, looks like another ProShares Ultra Pro Short again. Not exactly sure which major indice it's tracking. But again, over the last month, this is up 92.52%. Here's another ProShares ETF, looks like this is a 2 times inverse leverage exposure to VIX futures. VIX is a way of measuring volatility within the markets. And over the last month, this is up 191.58% as well. So you can see here a number of different ETFs here, inverse and leverage ETFs that can be utilized to trade when a market is trending down. So I may try to play around with these a bit here. I have played around with SQQQ in the past with some good results, but again, this strategy is kind of trying to do market timing, which is not a great long-term overall investment objective. But given that there's a new administration in office right now with a lot of anti-trade policies and just the unpredictable nature of the new administration versus past administrations, could be a good time to invest in some of these inverse and leveraged ETFs in the near term anyway. So yeah, just want to talk a little about how the market has reached all-time highs and if there is a pullback, how an investor can maybe utilize inverse and leveraged ETFs to make a little bit of money. Yeah, let me know what you guys think of this trading strategy, if this is viable or not. Like I said, I've used this in the past, but I think it's a little bit of market timing. I know you can use current events to kind of predict some of these market trends, but not quite sure if this is a good investment strategy or not. Let me know what you guys think about it, if you guys have tried this in the past, and if you guys had any success with it. So kind of with that, I'll end the video here. As always, if you enjoy my videos, feel free to like, share, and subscribe. Building the channel, learning about investing. Hopefully you guys have been learning along with me. And yeah, kind of with that, I'll end the video, and until next video, we'll see